You're listening to the Practical Wealth Show with Curtis May, putting you in the driver's seat to control your finances. Let's start the Practical Wealth Talk about alternatives to Wall Street.
Today, what we're going to talk about are ways to improve your credit score. One of the things I keep getting a lot of questions about is credit. So, when I do my client introductions and I ask them, what are some of the top things on your mind? They always say, well, I want to work on my credit. I want to improve my credit. And I just got finished doing a class, a couple of financial workshops, and I'm about to do one as I record this on my way to do one for a family. And they always want to know, well, I want to work on my credit as a 21-year-old, right? And so I said, so I always follow it with, so you want to work on your credit so you can do what? Is what I ask people. And because you do need to. And so having bad credit is actually a transfer because it makes stuff that you do more expensive, right? And so you have to be able to if your credit's bad, your car expensive is more insurance. If you're looking for employment, they pull that and that can keep you from, if you're in business, getting into certain organizations that you want to get part of. Or it's a mess. So you definitely, if you're trying to be an investor, you want to have access to other people's money. But when people say it, I always start out with my classes with, hey, I'm reluctant to teach you this because most of y'all want to get good, work on your credit so you can go out and buy more crap, right? You want to get a new car. You want to get a house. You want to go buy liabilities, right? And so you want to get access to capital so you can use other people's money to buy assets. What's an asset? It's right, Rich Dad, Poor Dad, something that puts money in your pocket. So you need to access other people's capital so you can grow your cash flow, right? And so I want you to come into this with a perspective, but it's not fatal. So it doesn't really matter where you are with some discipline. And so what a part of this strategy is, though, is that most of the time when you want to work on credit and you want to pay people big money to fix your credit, a lot of this stuff you can do yourself. At the end, I'm going to give you a link to inexpensive, like 26 class videos, worksheets, what are they called? Letters that you can send out to dispute letters built in for under $100. You can just do it yourself. If you're so inclined, now if you don't have time, don't have patience, then if you email me, I'll refer you to some people that'll do it for you. Probably a little bit faster, a little more expensive, but you want to learn how to manage it. And so credit repair, in my mind, falls under the financial management umbrella. Okay, and so we're going to talk about ways to improve your score, things that you can do. And before I go into that, let me give you a little aside. So we're very excited. We're always talking about getting money, and my oldest daughter is going into her senior year, so she's finally got into the mind of, all right, maybe I should get up out of bed before 10 o'clock. I'm like, look, you better get your butt up. You're not off, right? You're not going to, sleep in until 10 o'clock every day and meander through the day. You have to get into your day. When you work out, you need to, she's cello. She could be first chair in the orchestra if she practiced 15 minutes a day, 20 minutes a day. So you're going to get up, you're going to get into a regimen, you're running track, we're going to work out, a few days a week. You're not just going to, be off during the summer. One of the things I did, one of my, and I'm probably going to get him on the show once we get it perfected. One of my clients, like, Curtis, hey, listen, I've been studying this e-commerce thing, and I just had a guy make $11,000 in 1 month, through his Shopify store. It's like, okay, I'd like to hear about that. So he came over, I had him set up my, one for me. We're going to do something with fishing rods. So, cause that's the high selling item, and Do I care about fishing? Not really. Okay, but people are buying it, so you know that's what you're looking for. It's not about me. Walmart sells more than one thing, but the exciting thing was my daughter, after she's had to site up for about 3 days, just made her first sale. And so I wanted her to experience, promoting stuff through Instagram, doing bathing suits, selling bathing suits, getting them wholesale from somewhere else, drop shipping them directly to the people. What I want her to understand, I'm re-listening to Kiyosaki's book, A Students Work for C Students, C Students Work for the Government. So I'm trying to teach her to be and she's straight A student, okay? C student means capitalist, okay? Capitalists, C students hire A students, MBAs, to run their companies, right? So I want her to get in the mindset of, yes, you're going to go to college, but you need to make money. You need to learn how to create value in the marketplace for which you get paid, because security is the ability to produce. So I told the story of our father. My grandfather was in business, hired in the 50s as a black man, 25, 30 people working for him. My father, we had a supermarket. He had, at least 8, 10, 12 people, half of the May family working for him with our supermarket. And we had, my parents were in the tavern business, which I helped run. So we and my wife's parents were self-employed. My wife is self-employed. So we're like, all right, we hire people, we employ other people. So don't get it twisted. You need to have a mindset of you either going to look for a job or you're going to create jobs. I want her in a mindset that I am a job creator. And if I'm working to learn, but ultimately my security lies in my ability to create value in the marketplace. So, and that's an uphill battle, because that is not the message she's getting outside of our house. That school is teaching you this whole go to school, get education, get a good job. See, I was blessed. I never got that talk. Okay. My dad told me you'll never make any money, work for somebody else. So I'm instilling that. Here's a tip, family wise. I'm going to this week, at least this month, we're going to play cash flow as a family at least twice a month. More if we can squeeze it in. We got some neighbors that are committed to play, and we're going to work to kind of mold our teenagers. Some of them are graduating, some are rising juniors and sophomores. My oldest daughter is going to be a sophomore, my middle daughter. And so we're going to get them understanding the money, the stuff that they don't teach in school, because you don't learn about money in school. You got to learn about money from your parents. So if you don't know anything, what are you teaching them? You're going to teach them how to be poor. You're going to teach them how to go get a job. All right. You're going to teach them to work on their credit so they can get good credit, so they can go buy liabilities. See, if you go into debt, it's a trap. You want to get good credit, but understanding debt, there's good debt and bad debt. And debt is an obligation on future earnings. So if you go buy a car, or you go and get into student loans, you're collateralizing future earnings. You're using future earnings as collateral. So just understand that. And so, because what they're looking at is, can you pay us back? And then you're committing to X amount of dollars that's to service the debt in your future paycheck. So if you keep stacking that stuff up and not paying attention to it, then all of a sudden you've got $300,000, $400,000, $500,000, $1,500 a month of money committed to before you earn a dime. You working to pay bills, right? So debt is a two-edged sword. So you can't survive in the U.S. of A without debt, because our dollar's debt. But you've got to understand why you want to improve credit. So one of the things you got to understand is, as you go pay people to do this stuff, and I don't have this in front of me, so I'm just going by memory, but just understand, first of all, understand the FICO score. So the FICO score, 35% of the FICO score is payment history, 30% is debt ratio, 15% is old credit, 10% is mix of credit, length of credit is another 10%, and inquiries. Hopefully it adds up to 100, right? And so part of understanding that, so understanding 2/3, 65% of the FICO score are things you control. So if you go pay somebody to fix your stuff and you still don't pay your bills on time, you still are not managing your cash flow, you're paying late charges, you routinely, so debt rate, so that's payment history, and then debt rate, that's 35% of the score, right? And then debt ratio is if you're, just to keep round numbers, if your limit is 1,000, and you routinely carry, $5, $6, $7, $800, $900, or you're redlining with your money, even if you're paying it, the credit score rewards you. So if you can get your balances down to less than your 30% of the limit, then that's representative of 30% of your score. That will make an immediate impact, 60 days or so in your score, if you just either raise your limits, if you can get them raised, but pay down. You got to pay down. If you've got a $600 balance on $1,000 card, then you got to get it down to $300 or less, and you got to keep it there. And so if you do that and you pay your bills on time, you will see your score bump up dramatically. All right. And so here's the thing. You got to have hope, because you didn't get into it overnight. So you're not going to get out of it overnight. Okay. And so one of the things is that because you fix your credit, bad credit, folks, is a result of something. All right. And so you've got to figure out why is your credit bad? Okay. So is it because you lost your job? You became ill, which is a lot of times, okay? Or is it because you have bad spending habits, because you are a shopaholic and you want what you want when you want it, and you don't care, and I deserve it, okay? And so you got to figure out why your credit's bad, and you got to get control of your spending. So to me, I work with people. I want to see your cash flow. How are you managing cash flow? So I don't care about your credit right now. And I care about you managing cash flow, because if you can't manage that, you can't save 10% of your income. Don't talk to me about credit, because you're not saving. You don't have any money saved up. You got to have an overall. That is part of your overall plan. Okay, and so you want to have good management, because if you have bad financial management and you get more credit, you're accident waiting to happen. Okay, you're gonna go out and you're gonna do dumb stuff. And I want you to, because if getting your credit, all you have done is treated the symptom. Okay, I treat the disease. I want to figure out why you're jacked up in the first place, because if it's bad, or when people lose their house and they get foreclosed on, when I hear that, I'm looking at, okay, first of all, they probably had a house, too much of a house they really couldn't afford. So I'll look at that. And I've seen stuff where their payment was 50% of their debt. The ratio in terms of their take-home pay or their gross pay, their mortgage was 45, 50, 55, 60% of their pay. They just got too big a house. They really couldn't afford it in light of their other bills. They didn't have an emergency fund. They didn't have disability insurance. They didn't have life insurance. And so if one of the breadwinners died, they can't carry the house on the other person's salary alone. They had no life insurance. Somebody got injured. They didn't have disability insurance to protect their income. They had a layoff, or I've seen people have a strike, and still haven't caught up a year and a half later because their company went on strike and they weren't prepared. Most people can't go without pay for like 2 weeks. They're already halfway, 1 foot in the poorhouse. I don't care if they make $100,000 a year. If they can't go, most people are like redlining. And so you have to get that under control. You have to build an emergency fund, and you need to have liquidity, folks. And now you have good financial management. Now you can attack your debt. So there's an order, because it's not fatal. I've had somebody go from bankruptcy to $750 in a year and a half, and so it can be done. And so if you're a type person and you like to charge expense on your credit card, you got to stop that. Okay. And because you have to get control of your money. See, you should credit cards are for emergencies and convenience. So if you want to build your credit, first of all, it's really much more than repairing credit, but building new credit. We have a system called credit building, and one of the steps is get good stuff going on, right? So that means, getting a secure card, for example, and you got to get new credit that you manage. The credit report, I used to do mortgages, is a written verification of your integrity. Think about that for a second, right? And so did people loan you money or extend you credit? Did you pay them back? Well, if you didn't pay them back, nobody's going to extend you new credit, or if they do, they're going to charge you a higher interest rate because you're risky. And so they might be willing to take that risk, but they want a higher rate of return for taking more risk. So credit is the cost of money. And so if you're a bad risk, you get charged more. So if you manage your credit, you're a better scorer, meaning that you're a lower risk and you get preferred rates. Okay. And, so you want to, if you work with somebody, you want to get, advice. But the main thing I tell you is going back to managing cash flow, and you got to make your payment. Number one thing you can do is make your payments on time. And so you need to develop, I hate the word budgeting, but you need to develop, let's say, a spending plan. Okay. And so we teach a spending plan called, a bucket system with 3 buckets, but you basically got to track your finance, your income and your outgo. Okay. And so you should get help with that. You could use a software. If you call us, I'll help you do that. One of the main things that we spend a lot of time on is cash flow management, because you can't pay yourself first. You can't manage your surplus. You need to know where you're at so you can make good decisions. So if and if it's a big ticket emergency that comes up, you've got to, or an impulse buy, you've got to kind of know your cash flow so that if you can handle that payment. Even in our banking strategy, with the life insurance, when we talk about being your own bank, you have to be an honest banker. So just because you could have $25,000 in your banking system and it's my money, I want to get my money. Yeah, it's okay, but you need to be able to make the payments. You got to be an honest banker. So when do you want to pay it back? If you can't handle the payments, we got to structure the payments so you can pay it back over 10 years, 2 years, whatever, but you're going to pay it back and you have to manage it. So it's the same thing. You have to have that discipline in using other people's money. I just want you to have the same discipline with your money. So you kind of want to work in combination, because the reason to get good credit is to be able to access other people's money so you can buy assets that make money. Okay. And, first thing you want to do is pull your score. So step 1 is you can go to free credit report. And I'm going to accrue links to the course and a report in the show notes so you can kind of get into this. But you want to pull your score. You want to make sure there's people that input this stuff. So you want to make sure that there are no errors on there, And so you want to see what's on it. So you really have to manage it. You got to know what's on it. So you want to pull it. I don't know if you're ready by the show notes, but I'll put them out later if I can get it together. I have a little white paper on how to read the report. Okay. And because when I first looked at them, I didn't know up from down. I had somebody show me how to read it, so don't feel bad. Some of the ones, Credit Karma or whatever, they're a little bit easier to read. Sometimes you get the number because there's 3 credit bureaus. So a lot of times when you get a mortgage, you're looking at your middle score. They throw out the high, they throw out the low, look at the middle score, and that's what they judge you on. Let's say if you're trying to buy a house or investment property or what have you. And so you want to make your payments on time. 2 easy fixes are make your payments on time and pay down your debt ratio to less than 30%. And so if you just do that, those 2 things, right? So because fixing your credit is about 15% of the score, like getting rid of the old stuff. Here's a funny thing. It is, a lot of people think, well, I got into a payment arrangement, and you'll notice that's why, if you get a mortgage, they say, look, don't pay any, don't pull your credit, because if you're doing a lot of inquiries, you can do soft pulls. A soft pull is a hard pull. A soft pull is if you, you go for a job, and they pull your credit. You can pull your own credit without any ramifications. Car insurance or homeowners insurance, they review that, because if your credit's bad, property and casualty companies look at bad credit as you have a higher propensity to file a claim. Good or bad, right? But that's one of the ways they look at that from the underwriting standpoint. So all of a sudden, if your credit's jacked up, you will pay higher car insurance rates. So you really have to manage that. A lot of times, in certain communities, urban communities, I run into, you see these people had an electric bill in their name when they were 5 years old. So sometimes, depending on where you're coming from, your parents have messed up your stuff. So you need to pull your situation so you see where you're at, and then you can begin to, get some of the old stuff. But sometimes if you make a payment arrangement, this is very counterintuitive. I didn't even know this. If you make payments, so like if you right now your score is at 620 and you've got charge-offs and what have you, they are already reflected in your score. So if you start making payments on that, it will actually, and so if you're listening to this, please email me if I'm saying this wrong, it makes your score go down, at least temporarily, because in layman's terms, basically the scores are those charges are reflected in your FICO score. So if you make a payment, you, for lack of a better word, I don't know the technical term, but you basically woke it up in terms of the eyes of the credit scoring bureau, and now you've activated that debt. So now is there's a late pay, all that stuff. It just kind of reflects it, so it actually makes your score drop. And every time you make a payment, you make your score drop. So it is actually better if you've got charge-offs. See, so people put more, I got, this $5,000 over charge-off, I got to get rid of this stuff. No, you don't. You need to save money, pay yourself first. You need to pay what you have on time, and then get your debt ratio down. And if it's something you must get rid of, it is better to save up money, especially in your banking system, making a offer if you can, and pay it all off at once. You'll take a slight hit, but you'll take one hit instead of multiple hits every month for the next couple of years. So that is a tip. So those, stop. Even one a tip, and you'll get it in the course, is that when people call you, if let's say you've this is little tricks they play. See, if you don't know the rules, if you have a friend of mine shared this with me, let's say you're at your 7 years and it's supposed to drop off your credit, well, they sell the debt, right? So if those people call you and you say, well, I'm calling they collect the debt, and you answer and you state your name, and you get into an arrangement, you start the clock over back at year one. Okay, and so they know you don't know the law, right? Whereas if it eventually is supposed to drop off. So you got to know your rights. It's a thing we used to say with the law: if you don't know your rights, you don't have any, right? And so first thing is, I would say you got to get control of your cash flow first. You got to pay yourself first, and get what you have under control. If you build new stuff, one of the things that I would do is I would go to a credit union, go to Wells somewhere and take $300, $500, $1,000, whatever you have that you want to do. Get yourself a secure card. Okay, and meaning that you're going to put $500, $300 up as collateral, right? So they're going to put it in a safe. They ain't going to pay no interest on it, so don't worry about that. But they will extend you that amount of money in an unsecured card. So it'll spend like a credit card, or report like a credit card. You can rent cars with it. So you need credit today for hotels, for rental cars. You just need to be able to do that. They're not going to take a debit card. So you're going to have to develop that money. And then what will happen is, if you use that, you'll start getting other offers in the mail. You'll get a Cat 1. You'll get these other people. They're not going to be the best of the best, but you're trying to build your credit up. And then, you'll get one. I had one. I did this. I'm telling you, I know this works. Okay. And we got an offer for Cat 1 for $500. I used it, pay it back, put it 5 months later, 6 months later, they upped it from $500 to $1,000, and then all of a sudden I got other offers coming in, because I guess they can see, what's going on, and we're paying stuff, and so that's been working. So you've got to get new stuff, and you got to get good stuff reporting. Okay. So now I'm not a credit repair expert. I'm a cash flow management, get your finances together, manage your cash flow, build your own bank expert. But we have, we've interviewed 2 people on the show on this. Most of that's been around business credit, and you want to be able to build unsecured credit. I think they both help with that, but I'll have in the show notes a course called Credit 750 that with a link to another kind of do-it-yourself stuff. So if you're got patience and you want to actually learn how to do it, I'll give you access to that tools. But I just wanted to do a short report on short podcast on that, because I'm getting a lot of answers to that. And the main thing that I worry is why you want to get good credit. See, again, there's if you're getting credit so you can buy, as Rich Dad called, doodads, then all you're doing is obligating future income. So what you want to do is you want to think like an investor. You want to play the credit game so that you can get access to other people's capital, so you can use debt to help you create wealth. So the main thing I want you to get, you need to work on your credit, and that is a transfer, having bad credit, having higher insurance rates. But I want you to focus on the why. What is your objective? And your objective can't be to borrow so you can consume. That will lead you to the poorhouse. Okay. And so I want you to borrow to buy assets with leverage so that you can build wealth. So stay tuned for our next show. I hope you guys are having a great summer, and I want you to have, as show this comes out. Well, this will come out before. It will come out before the 4th of July. But I want you to. Are you celebrating your Financial Independence Day? So one of the things I want to challenge you, if you'd like to discuss this. I was talking to a group of people last week, and I was like, "What's your financial independence number? What is your?" In fact, I was training a group of my advisors that were teaching how to do this. And I'm saying, do you have a written plan to build wealth? Do you have a written plan to create velocity? What is your plan to get out the rat race in 10 years or less? And so if you don't have one, give us a call, 610-622-3121. Send us an email, kurtmay@gmail.com. Say, Kurt, I'd like a blueprint for how to get out the rat race. I'd like a blueprint for how to get out of debt. And can you send me information on how to improve my credit? And we'll get a report out to you. And again, look for in the show notes, we're going to have a link where you can download a do-it-yourself credit repair report. So, because the main thing is why it's good for you to learn how to do it, because you own it. You can learn how to do it and do it as a business. If you figure out how to do it yourself, you can teach other people. Everybody got bad credit, or half of the people got bad credit. So guess what? You as an entrepreneur, and you make money by creating value in the marketplace. So anytime you can learn a skill that's worth it for you, that you can help somebody do something they're willing to pay you for, then that is how you generate new money. So you got money to save, to pay off debt, to enjoy your life and generate new money outside of your job. So think about it, folks. So we'll see you at the top. It's been another episode of the Practical Wealth Show, and you all go out there and make it a prosperous day.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.